Evan, what do you make of the numbers? The trend is our friend, according to the Treasurer, as you heard there, but there are some uncertainties, not the least of which China, Evan.
Yes, and I think that's part of it. I think you've also got to highlight the caveat that we've all put out today with regards to what's happening in New South Wales. That's all based on the idea that, particularly if you look at what the numbers really showed today, is that consumption and household consumption is up. Part of household consumption would be things like tourism. It's part of free movement. And any signs that the states will shut themselves down again would be a big interruption to that, because household consumption is part of the reason we're now forecasting an expectation to see 0.75 of 1% in 2021 in terms of those numbers. China is also part of that. It is clear, and if you look in that assumptions box that they released, the Chinese trade tensions, and they're not just alluding to here in Australia, they are talking about them globally. We are not the only nation that is currently having disputes, is probably the right word, with China. We know that Europe and the UK is, and we definitely know that the US is having the same scenario. If they were to get ramped up into 2021, that would also be an impact for growth. So there is hiccups on the horizon. They are there, but the numbers, even though what Josh Frydenberg just alluded to in your small package there, is the numbers assume that they won't actually ramp up and they won't actually come through. So although he's alluding to it, it's a conservative budget, it is based on the assumptions that none of those scenarios actually play out. And that, I think, is probably hard to see. I think you're going to get hiccups. That is a given. It's already clear today that we're going to get hiccups and they are going to interrupt growth.
One of the things that he reiterated in that full interview when we get to it a bit later was that they're being cautious, though, in terms of forecasts on things like the iron ore price, which is soaring at the moment. But again, they do their numbers predicated on a price of $55 per tonne, which is a lot less than what it's going for at the moment.
Yeah, it's significantly less. So the US, $55 a tonne has been basically their number for almost 3.5 years. It hasn't actually moved, despite the fact that we do have an iron ore price that is averaging over 2020 now at around about $97 a tonne. And in the last quarter, it's now sitting at just shy of $140 a tonne. So there is going to be a windfall there. There is going to be that under-promising, over-delivering with regards to the price of iron ore. That's clear. It probably will be offset, though, by other factors. Discussing that, and what I mean by that is coal is the interesting one here. And the question that comes with that is that we need to, when we talk about coal, break it in half. We need to look at it from regards to coking coal, what we refer to as met coal, metallurgical coal, and thermal coal. The reason for that is that met coal is in some of its highest demand that we've seen. You need roughly around about 720 to even as much as 780 kilos to produce a tonne of steel. And we control 55% of the market globally, whereas thermal coal, we sit behind Indonesia and we're about 21% of the market. Now, the issue with China is on the thermal coal side. So that needs to be pointed out, that we do still have a very commanding position with the Chinese around coal, particularly considering their thirst for iron ore, but that will slow down. That we are likely to see thermal coal being impacted, and that will drag on our numbers. So although we'll do better on iron ore, overall, the impact on net exports is still there. It will be better than forecasted. I think that's clear, but there are caveats to how they're doing it.
How important has JobKeeper been to the whole story here about, I mean, we're seeing the spend come in less than forecast in the budget. Thankfully, a lot less people needing it at the moment as well. But as that safety blanket, how important was it, that wage subsidy, in the teeth of the crisis?
Yeah, hugely. I don't think there is an argument to be made that it wasn't the right decision. It is absolutely clear that it is. We're not the only country doing it. We're probably the only country that's actually had as broad a spread and as in terms of percentage.
Evan, I might just interrupt you if I can. I'll come back to you in just a moment. Just stay where you are. Let's have a quick listen to Jim Chalmers, the Shadow Treasurer. Then we'll get back to Evan Lucas for his thoughts on it.